In this video, we're going to talk about how to properly dollar cost average in crypto. We're going to talk about what is dollar cost averaging, how do you actually do it, what are the benefits of it, and also what most people get wrong when it comes to dollar cost averaging and specifically in the cryptocurrency markets. Plus at the end, I'm going to show you 3 different strategies that not a lot of people know about. I watched a lot of different YouTube videos and nobody seems to be talking about these, but they're really simple strategies that will make your dollar cost averaging investments almost infinitely more profitable. And this is the same way that I was able to make a small fortune in this last bull run. I kind of got lucky and kind of was just timing it based on Bitcoin's halving, which I knew was happening last year around May 11th, I believe it was. And also around this COVID crash that we had here, I started dollar cost averaging into both Bitcoin and Ethereum. And this allowed me to make a small fortune. So I'm going to tell you about what are my strategies as well as what do people get wrong with dollar cost averaging. Hey, my name's Adam Winning and I've been involved in cryptocurrency since 2014. I made this channel help make your trading and crypto experience easy, lucrative, and fun. So go ahead and like, subscribe, and turn on the post notifications. So let's talk about this. Dollar cost averaging. First things first, what is it? Dollar cost averaging is simply an approach to purchasing an investment in which a buyer spreads out the purchases so that the total price paid is less affected by market timing. So 2 examples, right? For example, dollar cost averaging is what I did, and I simply just took a portion of the money. I was getting it every 2 weeks. I was getting paid in crypto, and I just kept it in there. And I started dollar cost averaging every 2 weeks into both Bitcoin and Ethereum on a regular basis. And the investment did really good. Now, on the other hand, there's dollar cost averaging, and the other type of investment is lump sum investing. And this is when you just take all of the money that you're going to invest and you invest it at one lump sum. And for example, one of my girlfriends, Allie, she actually invested into Bitcoin right around like $60,000, her lump sum. And as you can tell, her investment's not doing well in the short term here. Now, I told her, hey, if you just dollar cost average in at these lower prices or buy more at these lower prices, you can lower the average cost of the investment and allow you to get into profit a lot quicker. So those are the 2 different types. There's dollar cost averaging and then there's lump sum investing. Now, what are the actual benefits to dollar cost averaging? Well, there's quite a bit, but dollar cost averaging can lower the average amount you spend on investments, which is what I told to my girlfriend, Allie. And also, it also reinforces the practice of investing regularly to build wealth over time. This was one of the recommendations that Tony Robbins made in his book, Money Master the Game. Maybe I'll flash a picture of it right here. Basically interviewed 50 self-made billionaires, and this was one of the key things that they talked about is to take a percentage of your paycheck and invest it every single month into the markets. Also with dollar cost averaging, we can automate it. I'm going to show you exactly how to do that. And what it really does is it removes the pitfalls of trying to time the market, which most people, they get the timing of the market all wrong, especially if you're a beginner or you don't have all time to study the markets, then the chances are you're going to buy the tops occasionally. Also, probably the biggest advantage and the biggest benefit of dollar cost averaging is it takes the emotions out of your investing. This is why most people are not good investors or traders, is because we get our emotions involved. And so dollar cost averaging is a mindless strategy that will allow you to take your emotions out and become a more successful investor. So let's just take a look at this. This is dcabitcoin.com, and you can take a look at this. For example, let's just say that we decide that we'd like to purchase $100 worth of Bitcoin on a weekly basis. And let's say that we've been doing this for the past 5 years, and we started 5 years ago, and we can go ahead and we can see how this would have panned out. So we would have invested over the course of the last 5 years about a total of $26,100. It would have grown into $110,000 or a 322% change, which is really good. And you can see it compared here had you have dollar cost average into gold or had you have dollar cost average into the to the stock market. You can see what the returns would have been. So obviously really, really good with Bitcoin. And with cryptocurrencies being such a volatile market and being so new on their adoption technology curve, I think dollar cost averaging makes sense for a lot of people to get exposure to this asset class. So now let's talk about these three different strategies that can make your dollar cost averaging strategy even more profitable. So before we do that, we have to decide on four things. So first thing that we need to decide on is we need to decide on an amount that we're going to invest, okay? And this can generally be a percentage. It should be a percentage. So for example, let's say that you make $5,000 per month. You need to decide on a percentage that you can go ahead and invest into this market. Now, obviously you shouldn't only invest into crypto, you should invest into other assets as well. But let's just say, for example, that you've decided that you're going to invest 10% of your paycheck each month or $500 into the cryptocurrency market. Okay, so first things first is you need to decide the amount. The second thing that we need to decide is we need to decide at what frequency are we going to invest, right? For example, I was doing it bi-weekly or every 2 weeks. You could also decide to do this monthly. You could also decide to do this weekly. Whatever you decide is up to you, and it depends on your lifestyle and your finances, right? Because none of this ultimately is financial advice because your financial situation is completely different than mine, right? So after you've decided on the amount or the percentage, right? And the key, right, to getting wealthy is to try to keep your expenses low when you're getting started so you have more money left over to invest, right? And this is how you grow wealth, right? But the idea here is after you've decided the amount and you've decided on a frequency, the next thing we need to decide is on a number of assets that we're going to allocate to, okay? Now, generally, I think that, if you have less money, then I think that, just sticking to maybe 2 to 5 assets is probably good. And maybe if you have more and maybe if you have more capital, maybe you can do like up to 10 to 12 assets. I think anything over that is kind of overkill because it becomes hard to track and it also becomes confusing with what's going on with each different project that you're investing into. So I think less is better. And then after you've decided on the number of assets, the fourth thing that you want to decide on is you want to decide on which assets in particular we're going to invest in. Now, for most people, just dollar cost averaging into Bitcoin and Ethereum is probably a great idea. This is probably a safer idea than trying to go and catch small cap, high risk altcoins, which obviously you have the potential of making a lot more money, but you also have the potential of losing a lot more money. So for most people, this probably doesn't make sense. So you may want to just dollar cost average into Bitcoin, Ethereum, or maybe you want to look at some of the top 25 crypto assets that are biggest by market cap that you feel most strongly about to build a little portfolio. Because the idea here, right, is we want to get some diversity, okay? Now, at this point, Bitcoin kind of acts as an index. The entire market follows Bitcoin. So if you just wanted to be, really indexed, then that could be an idea, or you could pick maybe a basket of your top, of the top 25 coins that you like most or you feel most confident about. Okay, so now that we've decided on these four things, and make sure you've done this prior or else the second part of this doesn't really make sense, okay? So once you've decided on this, here's the three different strategies. So the first strategy is the easiest strategy, and this is the strategy that probably makes sense for most people and is definitely the most mindless, the least emotional, and it's really, really simple. So the way that you do this is by simply setting up automatic buys, okay? And this is, again, in that book Tony Robbins wrote, Money Master the Game, he said to just set this up automatically, right? So that way you don't even have to think about it. It's just done, okay? And you can do that really simply by coming to a website like Coinbase. Like, for example, if this is your broker, you can just go here and click buy. And let's say that we want to buy $100, then we can set at how frequently we want to buy it. Let's say we want to buy $100 every week, we could do that. If you wanted to buy $100 every day, you could do that. If you wanted to buy $100 on the 1st and the 15th of each month, then you could do that as well, just like this, okay? And then you click preview buy and you just buy. It's simple. Your broker, Binance or Gemini or Kraken or Crypto.com or whatever your broker is, they probably have some sort of automatic recurring investment situation. So this is by far and away the easiest way to get started with dollar cost averaging is simply doing automatic buys. Okay, the second way that you can get started with dollar cost averaging and a little strategy that may help you become more profitable is to simply buy at support. Okay, so what does that mean? And I'll explain this to you, try to make it as simple as possible. But basically, we want to try to time our buys slightly by just figuring out when there's support happening. Now, how do we do that? The best way that I like to do this is go to tradingview.com. You can make a free account here. And then I like to check out a line chart. And then basically I like to see wherever I'm seeing like multiple touches here, then I like to say that this is like an area of support for sure, right? And what do I mean by that? Okay, so if I look at here, it hit here. It also hit several times here, and it's hit several times here. So this was a good time to dollar cost average in. I happen to buy some right here. And if we go lower, back into another range of support, probably like, around $12,000, $13,000 or so, I'll probably buy again. So this is the second way, is buying at support. And this is going to allow you to get better entries. Like another place where there's support is right here. We see that there's quite a bit of touches right around $30,000. And you'll notice with crypto assets, generally around round hole numbers are generally places of support and resistance. Okay, you can see right around $30,000. And this was right around like $20,000, right? That we saw all these support touches happening here. You can see even at like $40,000, there was quite a bit of support. Even up here around $50,000, there was some support. So this is a second way that you can do it, is by simply, when price is crashing down, you can look to buy at support. Now, the third way, which may be the best way to do this, or one of my favorite ways to do this, is to buy when there's fear in the market. And if you remember Warren Buffett's famous quote, he says to be fearful when others are greedy and be greedy when others are fearful. So be greedy when others are fearful, meaning that when people are fearful, that's when we want to get into the market. And so I always think that this is maybe one of the easiest strategies, is come to a website like this and check out the Crypto Fear and Greed Index. And you can see when people are fearful. When the marker's down here, this means that people are fearful. And when it's up here, this is when people are greedy. So this is likely when you should be taking profit. So if you just take into account this, like, hey, I'm going to actually dollar cost average when I get like a big red candle, or when, people are fearful, then this is another really great way to do it. I was dollar cost averaging personally here when the Fear and Greed Index was down here in the like 10-ish range. So some concluding remarks. So the idea here is, instead of trying to time the market, let's just dollar cost average in. And the easiest way and the simplest way is obviously, right, to set up these automatic buys. We've decided the amount that we want to purchase in terms of a percentage of our income. We've decided the frequency, the number of assets, and which assets that we'd like to invest in. And by the way, if you're looking for like what assets should I invest in, you can come here and you can follow our portfolio. Just go to bluedgefinancial.com/crypto. Just become a member and you can see our portfolio here if you'd like to. Okay. And obviously we talked about these two other methods, which can help you as well, maybe get an even better cost basis, is buying at support or buying when there's fear in the market. This is another really great strategy. Oh, hey, and by the way, if you found this video helpful, then you want to follow us on over at Blue Edge Crypto on Instagram. We put out helpful videos pretty much every single day, and we also put out a lot of content in the story. So go give us a follow at Blue Edge Crypto as well. Thanks so much for watching, and if this video was even slightly helpful, would you please just click the like button? It really helps us out a lot and helps us reach more people.